Now, okay, Dan, so I'm going to have to push back because you're more bullish on Apple, and I got to understand it. So there hasn't been a ton of news about Apple in the past few weeks or months, just some great execution. So isn't it riskier to buy the stock here given how the multiple has expanded?
Look, in my opinion right now, you're looking at a super cycle for Apple. And in my opinion, when I look at what's happening in China, 10 to 15% above expectations, I think we're just in the start of what's really going to be a re-rating of the stock. You know, I ultimately look right now, you look at the services business, that could add $15 per share. But it all comes down to the super cycle, what we're seeing in the install base right here. I think we're only halfway through a re-rating in Apple, which is why I view the bull case now is $400 per share. And I expect a strong beat and raise from Cook and Cupertino going into next earnings.
So we'll round up and say the stock's at about 300 now. 400, you expect it to move up better than 30%. But on what news? Because we're not going to know if this is a true super cycle until, like, what, September, October, probably at the earliest? I mean, is the stock going to hold up that well throughout the year until then?
I view it as a two-part sort of view. I mean, iPhone 11 right now, if I look, that's going to be probably about 5 to 10% above expectations. Then fundamentally, you look at the next phase going into 5G. That's going to be the second half of the cycle. So I view it as it's going to hold up well because right now we're looking at 190 million units in terms of what we see for iPhone. And when in terms of all of our checks, especially in China, I believe right now China 5-10% above expectations. It's going to be a 1-2 punch. You can maybe have some speed bumps here and there, but in my opinion, a year from now, the stock is a 4 in front of it.
So, Dan, the fact that almost all of the move we've seen in Apple over the past year has been multiple expansion. I mean, you talk about the fact that we're in the midst of this re-rating right now. What do the new goalposts look like in terms of fundamentals and how investors need to be assessing the stock?
Well, I think it's a combination. I think, look, a lot of investors have definitely missed the sort of run here on Apple. And I think, you look at the stock up 80% plus, many will say, is all the good news baked in? I think it's a re-rating, but I think the key number is right now 350 million of the 925 million install base are right now in a window of an upgrade opportunity. That's the key. You go into a 5G super cycle with iPhone 11. I think that combination is how you see numbers move up and a re-rating. That combination is how you get to $400 in our opinion.
All right, Amit Daryanani of Evercore also with us. He raised his price target to $315, that's $315 a share over the weekend. But Amit, I believe you also went from strong buy to just garden variety buy here. So I wonder, now is the time of year when we typically get from Apple a sense of how revenues on the App Store did between Christmas Eve and New Year's Eve, New Year's Day. Do you think we get those numbers? Is it a bad sign if we don't? What do they need to say if we do?
Yeah, what I'd say on aggregate on the App Store, our sense, the December quarter was up about 18 to 20% high teens kind of range. The U.S. was probably up in the low 20% range. So I do think the App Store is growing in line to that services expectation of 20% growth. Listen, Apple has been scaling back the degree of information they keep giving investors, I think, consistently. I would imagine if they had to disclose the App Store data between the Christmas and New Year's timeframe, they would have already done it. So I would say it's unlikely we get them now, but based on our own data, we think that number in aggregate for December quarter is tracked in the high teens.
Amit, as we look forward to earnings in the next couple of weeks, I mean, is this a name that's priced for perfection? What happens if it doesn't meet those expectations that are out there on Wall Street right now?
Yeah, I mean, listen, being up 80% last year, there's a lot that's priced into this story already. If you don't meet expectations, clearly there's going to be a negative reaction. It's going to be disappointing for people. But the part I would stress is if you look at the December quarter guide, the set of numbers that are out there, Apple basically guided December quarter revenues up about 36% sequentially at the midpoint. What's notable is that's only 200 basis points better than what they did in December of 19 when they negatively pre-announced. So I do think the bar is fairly low in the context of how well the iPhone 11 and the AirPods and the wearables category has done for them so far.